everyone, I'm Qiande Xu, CEO and co-founder of Alex, the first full-service DeFi platform on Bitcoin via Stacks. First of all, thank you so much to our growing community and supporters. We value you and listen to you, which motivated recording this video. So today I'm going to talk a little bit about how Alex is able to offer borrow lending on Bitcoin without liquidation risk and what this means. We have received many great questions about this feature, and I want to discuss why this is so interesting. First of all, what is liquidation risk in DeFi? Liquidation is what occurs when the value of your collateral drops, causing your LTV loan-to-value ratio to rise above the maximum limit, which triggers your position being forcefully closed and you're charged liquidation fee as well. To use a very simple example, let's say a DeFi platform has a maximum LTV ratio of 50%. Now, let's say you have 10K of Bitcoin and you put into a collateral pool. That means that you can now borrow a maximum of 5K against the value of your collateral. Now, for our example, let's say you borrow 4K of stablecoins against your 10K of Bitcoin. So your LTV ratio is now 40%. So you are okay. But as we all know, crypto is very, very volatile. So let's assume that 1 month later, you take out, after you take out your loan, the Bitcoin drops 21% in value. Now the value of your collateral is now what? 7,900. So now you are borrowing 4K against 7,900. So your LTV is now 51%. So you are over the max, which triggers automatic liquidation, meaning that your collateral is automatically sold off, causing you to lock in your losses. And to make matters worse, the DeFi protocol will charge you significant liquidation fee in excess of 8%. As of October 1st, 2021, the volatility of Bitcoin is approximately 80% annualized. Now, just for comparison, the volatility of S&P 500 is around 13% annualized. So with this high volatility, but without dynamic rebalancing of your collateral, there's a significant chance that an outlier event will occur and causing forced liquidation. Lending and borrowing is a foundation that financial systems are built upon. Liquidation risk is really bad, and this is a real issue in DeFi, that you can't even take out a simple loan without having to worry about your LTV and either to pay back the loan or depositing more collateral as the market shifts to avoid liquidation. And if the market moves really very, very fast, you won't even have time to do anything. So you just get wrecked. So this fear prevents the mass adoption of DeFi, which directly limits DeFi from realizing its full potential. So this is what happened on March 12, 2020, so-called Black Thursday of DeFi, when a dramatic drop in Bitcoin caused tens of millions of dollars to be liquidated across many, many DeFi applications. This is currently a big weakness in DeFi because simple lending and borrowing should be really boring and worry-free transaction. But because of the volatility right now, it's like driving a car without seatbelt, right? Everything is okay till an accident happens and you are badly hurt. At Alex, we have solved this problem and we have eliminated liquidation risk by drawing on the financial expertise of our team of quants. Now, quants are the programmers and math nerds of finance. And in my career in finance, I have worked as managing director of quant divisions at both Morgan Stanley and Credit Suisse. I have published the book Rule-Based Investing. So most of my professional life has been spent building quant trading strategies for major institutions such as hedge funds and pension funds who want to take smart risks. Together with my co-founder Rachel, an accomplished quant herself, we have built an all-star team of the smartest people we have worked with, who have been part of the billion-dollar quant businesses on Wall Street. So we have taken the knowledge, experience, and fluency in creating financial instruments and managing risk through DeFi. because we make DeFi accessible for everyone, and to help DeFi mature and grow and become the revolutionary force of not just financial, but also cultural change that we believe it will be. So what we have created is a dynamic collateral rebalancing pool that draws from the Black-Scholes model using option pricing. This all sounds fancy, right? But what does it mean? It's really very simple. It means that instead of your collateral being just one single asset, we have created a collateral pool with both risky and riskless assets, governed by a rebalancing equation that actively responds to the market by continuously shifting the weights of the pool between risky and riskless. So with the risky asset, say Bitcoin, is going up, the pool will shift towards the risky to capture that upside gain. And then when the market going down, the pool would shift towards the riskless to minimize the losses. And then when market drops suddenly, it triggers the risk off condition, then the pool is entirely moved to the riskless. This animated GIF illustrates how our dynamic rebalancing pool would have behaved during the events of March. Notice where the full shift to riskless occurs. This is like having a seatbelt and airbags for your collateral. So in an emergency, it will protect the value of your collateral so you don't run the risk of liquidation. You are saved from catastrophe. Alex's algorithmic engine and diversified pools minimize the risk of a borrower's default. The result is a smoother lending and borrowing experience. Parties have more peace in mind and are interrupted less frequently and achieve robust return even in a volatile market condition. It helps to make lending and borrowing, the most straightforward and secure activity that it should be. And it needs to be built, the foundation of DeFi 2.0. I hope this helps explain what liquidation risk is and how we solve it at Alex. For more details, please see our white papers, which is on the website alexgo.io, and on Medium, we are at alexgo.btc. And please, we would love you to follow us on Twitter and join our Discord as we continue in our adventure to shape the future of finance. Thank you so much. I'm Qiande Xu, co-founder and CEO of Alex. See you soon.